Welcome to the Thursday and final London session for the week. If you're new here, my name is Deeyana Angelo. This is TopstepTV. I've been trading for 16 years. And 11 years out of that, I've been trading as a prop trader, mainly specializing in crude oil and gold, but also occasionally, towards the end of the day, dipping toes into equities. All right, so today, before we get into analysis, I want to answer a question that was pretty loaded from reading group yesterday. And it was to do with the process. So I'm going to read you the question first. And it kind of ties nicely into analysis and journaling and stats and all of that. So reading group said, or reading group, I don't know how to read that, but let's say reading group. How much of this technical analysis can you apply in the heat of the moment to your trading? I know you're super disciplined and professional, but does it ever get difficult for you to be pragmatic? Okay, so first of all, when we're doing market prep, you're not supposed to do it on the fly, okay? If that's what you're trying to do, you're probably going to get lost in the heat of the moment. So that is very, very true. But here's the kicker. So daily prep is something that you really need to start doing. If you just come to your charts and then you just go, I'm going to take a line and I'm going to go click, click, rectangle, rectangle, that's not a prep, right? You can do that once you've been consistently profitable for, at least 2-3 years and you're very, very familiar with your process, with the levels, what you're expecting to happen. But if you're not there yet, which I can imagine a lot of people are not, this is not the right way to do it. Why? Because there is a mind-muscle connection when you're writing something out and when you're typing things out that happens. And if you don't do that, clicking a few buttons is not going to create the same mind-to-muscle connection. So in order to even develop the process that you can follow, a systematic process of following what should happen, what you're looking for, you need to actually type it out, right? Ideally, write it out if it's like the beginning of your journey. If you're trading for 1 year or less, I would actually go to the old pen and paper, old school, and just start writing things out. So just a few lines on the chart, it's going to make you get lost in the heat of the moment. And even if you look at Dakota, the way he's charting things, he's been trading for a long time. He's probably been trading for as long as I have. So I know it's at least like, what did he say? I think it's about 15 years that he's been looking at the charts and staring. So he started out very, very young. So even if we look at how he's charting, so when he's adding to a position, he goes added, one lot at blah, blah, blah level, right? So he doesn't go, I'm just going to add willy-nilly. He has points where, he's looking at structure and he's adding things. That's all just a result of experience, result of doing the same thing over and over. And I know that you look at all of us here and, I go to the daily chart on crude oil and, then I just go, well, this was the NFP range, this was a weekly demand. But that didn't come about with me just kind of sitting here and, doing this in the first 2, 3, 4, even 5 years of my own trading. It wasn't, the process didn't look like that. The process that I still have to this day and that I still default to whenever I kind of get myself into a bit of a, maybe a drawdown or, something. So I basically do this. So I have a very simple document where I do type out the things that I want to see. Now, this would probably look different for you, because if you're not using my methodology, you have your own approach or somebody else's approach. But this is a good way to start things. So for example, I have some checklists that I want to see, right? So weekly charts, supply and demand, and Q points. Q points are my concept to kind of try to figure out whether we are at the middle of the ranges or extremes of ranges. And I do that for the weekly chart, daily chart, 4-hour chart, and even sometimes 1 hour and 30 minutes. But the main thing is to see that larger time frame picture, to get a chart location idea, right? And then as you do that, let's say weekly demand, daily demand for crude oil, so that's where we are, right? I also like to have an additional thing if you haven't been doing this and you're not that great with patterns. I also like to have a section for some of my students, price patterns. So reversals, yes or no, in the last 2 to 4 candles. Now we're talking very big time frames here. Now what this does, it tends to give you an idea of the general direction. So right now I can see that we had a supply on the daily chart, and we had a reversal pattern. We had an inside bar with a follow through, right? So this whole thing is actually called a 3 inside down pattern. And it's kind of one of those 3-bar reversals that Dakota talks about. So I look at those on a very large time frame. So that would be the first step. And then once you're done with that large time frame context, and it can be anything, it can be previous weeks, low and high. I don't necessarily use those, but I know Francis Green uses it. I know that many other people look at those points as areas of interest intraday. And then once you're done with that, we can move on to the profile. So weekly, daily, 4-hour, and then 30 minutes. That's where you get into the intraday time frame that is based on other concepts. So for me, that would be value open. So are we opening down? Are we opening inside value in balance? Above it, and how far? And then I recently added something that I used to do for myself, but now we have Edgeful. So I said check Edgeful for relevant stats, gap, volume market open, blah, 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 price action, outside days, initial balance, breakout, single versus double. Now, as I work with very similar products, I already know these by heart. So that would be the next step. Again, I'm not doing that necessarily on the fly as I'm entering the trade, right? I'm doing it at the open. This is why I like to wait and see for the price to develop before I actually plow into any trades, because I want to see how the market behaves if we have a gap, if we have, open inside balance. And I always find that having more data will help you with your trading decisions. And then I also have the initial balance range. Is it normal? Is it wide? And does it go over the entire average session range? Have we smacked completely through the average session range? Or are we still inside it, but we're kind of overshooting 2/3 over it? So none of this is being done on the fly, right? I am doing it in the first sort of half hour of the exchange open of any active trading hours. London, NYMEX, cash session, So this helps me, again, to get more data. If I have a very wide average session range initial balance, or initial balance that overshoots the normal initial balance range, there's a very good chance that you might get a good failed auction. So it increases the probabilities of a setup that I later look for. And then also volatility, right? So ADR exceeded or not. Is it exceeded at the open? Is it far away and intact, fresh and virginal, or whether it's already busted, right? So all of that is just some basic information that I think everybody should have, right? Before you even plow in to look at the 1 minute and 2 minutes and 30-second charts. This is the kind of thing that will keep you on the right side of things for the most part. Now, after that, I do get into the hypotheses. Now, hypotheses will be taken from the intraday orientation points. And again, all of this done in the first half an hour. But I'll be honest, guys, when you first do this process, it's very eye-opening. And I've had people who for the first time, they've never done this. It takes them 3 hours to do this. However, like with any new skill, with any new skill, the more you start doing it, your brain will start to develop new neural networks that will then get more efficient over time. The energy pathways will get shorter and shorter. And that is why you can see so many of us who have been trading for, as we say in the UK, donkey's years, to effectively get very quick and get this process down to a few clicks. So it's really worth doing it. If you're serious about making money, right, about doing this seriously, you have to have some sort of a process, methodical approach. By doing this, it will also keep you from impulsivity. It's not going to completely get it out of the way if that's your issue, but you will start to have a very good way to track your progress, because not every plan is going to be good, especially not in the beginning. You're going to suck, you'll suck. You're going to suck at doing these plans at first, and they might not come true, right? So hypo 1, let's say that I say, today we have an open inside value on crude oil. My first thought would be to fade any moves outside of it, because I know that the stats tell me crude oil likes to do the neutral days during London. So if we can find a neutral day strategy, so in this instance, since we smacked the initial balance to the downside, I would say for a failed auction long or auction fade, and that would be my first one, right? So looking for potential areas where I can do the failed auction would be even better, but sometimes because London is an out-of-hour session for crude oil, it's not going to maybe even have a level, so it gets a little bit messy. If you have a level, that's a better setup. So let's say that maybe we have an average daily range low that was exhausted. Well, failed auction from average daily low is what you would be looking for, right? So there's no messing around there. You're looking for a reversal after the initial balance extends. It's a very clear-cut thing that you tell to yourself what you want to see and what's happening. Now, second hypo might be a short, right? It might be a short, because if we go into a neutral day, so I would just say neutral day, short, continuation from the daily supply reversal, because I know that I have that on the daily chart, right? So it would be a very logical thing to follow the direction on a neutral day. A short would make sense. But for the first part of all of this, it's probably not going to be something that happens for you, right? So your plan will need work. And after you've done this, and after the day is done, this is where the review comes into consideration. So if you've had one hypo that did work out, you go, that worked. Can I try that again? When I see the same thing happening in light of all of these, very specific things that you want to see that are all market generated information, can I repeat that? And then if I do repeat that, well, how many times does that actually happen? Is that something that can become one of my setups intraday? So all of this is called situational awareness, but it will take time, right? So this is why I wanted to answer this question. It's a loaded question that I couldn't just do, yesterday in the last sort of 5 minutes when the question came in. So I said we're going to be, answering that tomorrow. Today, it's a very, very important thing. So process over anything. That's also something that Dakota always says, right? And that's what we mean. Process over profits. I'm going to tie this into Oren's question. Why do you not show balance in MLL? It's because it messes me up, right? So it makes me trade my P&L. So I'm always going, balance. Okay, I need to get that up. That I also get involved in not wanting to spend too many, days doing the combines and stuff. And I do start sizing up, right? On some of my other platforms, I do have a limit to the position size that I'm doing, and I have a whole bunch of other risk parameters and stuff. But obviously in Topstep are still working on those, and they are coming. They're working on getting things like being able to limit your position size to a certain number so that you don't go over that. I think they're working on things like, number of trades that you can do, and, a whole bunch of other risk parameters. So they're making like a risk management software that we already have. You can lock yourself out. That's risk management, right? That's all part of risk parameter controls. And this is so awesome. It's the only platform that I've ever seen that has that into like as a default option. I think Rhythmic and Ninja and stuff, they sort of have it for on the back end, but you don't have it on the front end, so you have to use like third-party tools, which is not terrible, but those cost money. So okay, so once you've done all of this, over time, you will indeed get so familiar with your process that you then can start just putting a few lines on the chart, and that will be enough because you know what you're looking for. You know your trigger signal. Now, if you're new and you don't have your clear-cut trigger entries, we talked about that yesterday during the fast markets because I felt that we were kind of going into trades without looking for evidence of price actually doing something. And, we don't move the markets. Even with 50 lots, you're not going to move the market, right? You need like 3,000 lots or 1,000. You need a lot of size to make any sort of a dent in price action. And, so I suggested that we all get on the same page to kind of have some sort of a trigger signal. So we're now working with the team on the back end so that everybody kind of finds that trigger that we're all going to agree upon. So once it gets to a level, we're not just randomly going into trades. We're actually going to have a committee-based sort of trigger signal that everybody's following. And that we can use around the levels to actually look for evidence of the price either reversing from it or breaking through it. And so it's still a process. It's still a new thing. It's never been done before. So again, bear with us while we develop that process further. Let's. Dave Sparklight says, I thought Dakota was like 22. I think he's one of those guys that looks younger. So I think he mentioned he's like 30. So he's not too far off, but, he's still a young person, but he's not 22. Okay, so you can see it in him. He's got a big maturity about him. It's not just about, the baby face. When he talks like he's like 50 years old, He's like, oh, I've had companies, I've worked in a coal mine. And I just find that quite interesting about him. He's a very interesting person. And so he's definitely not 22. But I think even when he was 22, I'm pretty sure he wasn't your standard 22-year-old. From what I can tell, he's a very entrepreneurial. He's very ambitious, very competitive. So he's an incredible addition to the Topstep crowd and TV and crew in general. And he's a great coach, right? All right, so let's now turn to some questions now that we've done this. But before that, if you're finding any value in what I'm saying, click that like button because it really helps us to get this kind of information to more people. I think trading is an amazing thing to do in life. So the more we can demystify what it actually means to be a trader rather than just sitting there clicking buttons and having your eyes bleed for 8 hours a day, it doesn't have to be that way. So the more people that we can educate, the better, right? So click the like button if you're finding any value in what I'm saying here. Now, we talked about the process. We talked about approaching everything from a more methodical standpoint. We're looking to have people analyzing, people on air, so, the crew, all of us who are involved. We are running this thing where you can have your stats analyzed online. Now, we're not going to do that today, but we're going to start it from tomorrow. However, I'm going to go one step further. Rather than just analyzing your stats, I would like to analyze your daily plans. So if you go to your stats and you kind of click into the journal, every day that you want to submit that, I can click into that and see what your plan looks like, okay? That way, I think that would be a much better option than just staring at random, risk, reward, and accuracy, which has its own place, right? But I want to see how you plan the day out and what you're working on, and then you can even score your performance at the end of the day. You can score how you did And that is where the systematic, methodical approach can come in. What setup worked for you? How many times? Was your plan actually a quality plan? Now, here's another thing that I've showed before, once or twice. Some people do the reviews by just going Muppet trade, Muppet trade, Muppet trade, lost all control, but I followed my personal loss limit. Okay, that's great, so that you actually stopped. But you really need to identify what worked, what didn't work. Did you follow your plan? If you didn't follow the plan, why? And that's where the psychology part, do we do psychology or do we do, levels first? Well, I would always say do the strategy first, because if you have a strategy that's just not working out, that's your problem. It's not your psychology, right? And then, varying stop losses constantly. One time using 30 ticks, another time using 60 ticks or 200 ticks. That's not consistent. So that's something that you would need to track in your post-mortem process. So after you've done your plan, you go to the performance post-mortem. So intraday plan scenarios, were they accurate? If they were not accurate, that means that's something you need to work towards. Like, why wasn't it accurate? And at that point, write down what actually happened. Let's say you have an idea for, I like to do like 3 high posts per day, both sides. So both sides of the story, shorts and longs, from areas of interest. So let's say you were trying to go short directional move yesterday off of VWAP in, I don't know, ES or NQ, whatever. And the price just ran straight through it. Then you want to see, was there any other thing that you could have used? Asia high low. Value, for me, it's an outer value edge. Yesterday on NQ, we left the value area, and then I had like a 35 handle area that comprised the Asia low and the former value low as well, outer edge. There was like my loose area where I wanted to become a seller. And then we kind of rushed into trades and whatever, it was all a bit of a mess. But again, the trade worked. So whether we ended up getting anything out of it or not, that's a matter of execution, right? Timing, execution, entries, performance. But that's not the point. The point is that the idea worked, right? So we had the value low that brought a reversal. That is what needs to go into your post-mortem process. And then go granular with that. Why didn't it work? Was the setup too tight? What stop loss, was the stop loss too tight? Would have we been better off maybe going for the slightly bigger setup? Was there a way to limit risk? I'm just going to let one of the dogs out because they're scratching on the door, so I'll just be a second. I have about 4 dogs here now. There was 5 earlier. So where were we? Yeah, so was the stop loss size maybe too small? And then you got whipped out. So what stop loss size would you have needed to actually take advantage of it? Put that down in your post-mortem. Don't just go, it was a Muppet, didn't work, I lost trades. That's not useful, right? You need to go granular on what went wrong and how it would have worked, right? So if there was, like, let's have a look at NQ actually. And this is a 30-minute chart, so I'm just going to have a look where we were. Time of day, it's the 28th. Were we on a 15-minute chart? I'm trying to remember. Yeah, so here it was, right? This was a trade. So what did we have? Well, in the end, we had a bearish engulfing happening right around that point of interest that I was talking about. So that would have been, too big for NQ, but let's go even more granular. So let's just go. Let me do a vertical line so that I can have a reference point. And interestingly, overnight VWAP was also something that was pretty reactive. So the level that we had in mind as a zone had a bearish engulfing on a 15-minute chart from VWAP, overnight VWAP. Go figure. 5-minute chart, let's see if we could have done something more to limit risk. So going back to the vertical line, there it is. So yeah, there was a bearish engulfing on a 5-minute chart as well. So that's a 2-bar reversal that I actually prefer than 3-bar reversals. So that could have been our trigger entry. So what kind of stop loss would we have needed? Let's see. This is all what should go into your post-mortem. This is not hindsight capital. This is, we had an idea on the day that worked, but we didn't manage to make any cash, right? Why? Because we fumbled around execution. So what would be the stop size needed to do this? So we have 38 handles, okay? 38 handles for that 5-minute chart. So that's a monstrous move. And therefore now we need to go even more granular. So is there anything that we could have done maybe on a 3-minute chart? That's Jay's favorite time frame. So let's go and see what happened on the 3-minute chart. 3-minute chart, a bit messy, but there was a clear crossover of the 9 EMA on the 3-minute chart. So that could have also been your entry, but that wouldn't have limited risk. We still have the same structure, only on a slightly smaller time frame. So let's go even more granular. Let's go down to a 2-minute chart. We're going crazy now. So where was it? Lost it. Okay, so hopefully we have enough data from yesterday. Okay, yeah. Right, so all of the time frames from 5-minute, 3-minute, 2-minute, they're all telling us that really we would have needed to survive this, we would have needed a pretty wide stop loss. That would have been a difficult one unless we're doing 35 handles, right? Now, interestingly, as I was talking about, getting better with trigger entry yesterday on fast markets, Coach Paul actually chirped in with the ATR being 35 handles. So me saying, well, maybe the stop was too tight there, it was a big thing. Interesting that the ATR exactly told us what the stop loss size would have been most appropriate, right? So very interesting stuff. And all of that can be a part of your post-mortem. None of this like Muppet, I'm lunatic, I lost it, blah, blah. No. Be very methodical and objective and kind to yourself. We don't need more self-deprecating talk from the, nonsense inner critic that we all have in our brains. So you need to look at it from a curiosity standpoint. Why didn't that work? And how could I make it work? Because it did happen. That's the stuff that's going to lead to the most improvement in your analysis. Amanda says, talking about the institutional supply and demand, was it one of those days on NQ, how they move price to get the institutional liquidity? No, I think, they're talking about stop runs and grabbing liquidity. So we refer to grabbing liquidity as stop runs, because from a retail point of view, you place your stops at really terrible areas and then they get taken because that's where liquidity is. But yesterday was a case of unwinding positions ahead of a big earnings number, which was NVIDIA. And that's what happens. You can also have these moves as we're going into the end of the month. So last day of the month can lead to offloading and rebalancing portfolios. And that always leads to institutional positions getting rebalanced and therefore causing some pretty directional moves. That's why I wasn't really in favor of going against that yesterday, especially if you listen to the Fast Markets, Nick Furtick and myself. We were talking about having those multiple single prints and then the statistic about the single prints being filled on the same session in the same day was only about 11%. If I have one set of single prints, I may get involved in a single print fade, but as soon as there's like two sets, no matter how big or small they are, I'm just like, okay, this is directional. Now the opposite side of the story is off the table. All right, let's have a look at what happened on crude oil. Crude oil is still continuing to extend lower, but again, taking into consideration that we have, how do I remove this? Okay, that we do have the out of hours London session. I would still like to fade this somewhere if we get a chance. So I'm going to start keeping an eye on that. Sometimes when I'm like teaching and answering questions and stuff, it's very difficult to actually focus on the markets because it is just me today. Russell Baker says, what time do you use for daily open based in UK? So daily London regular trading hours session starts at 8 a.m. But the London midnight, the open of the candle that I like to refer to for some of my calculations is obviously our midnight. So right now it's BST, so British summertime, it will be our midnight. So for calculations on ADR and ATR, if you use that, I use ADR, that is calculated from midnight, and then as the day starts making highs and lows, it's a dynamic measure, so we keep sort of recalculating plus and minus until the number is actually exhausted, and then I call that the exhaustion of the average daily range, or the same thing applies for average session range, which is my concept. So that would start calculating at 8 a.m. for London, and then depending on the product that you're trading during the New York hours, it would either be 2 p.m. for crude oil in my time, so I'm talking British Standard Time, or it will be 1:30 p.m. for gold and metals. Blaze says, how do you go about setting the stop loss? I got stopped out before the move. So looking at ATR is one way. I do have my own proprietary way of setting the stop loss size based on average session ranges, and then dividing that into something to make it viable to even get a good sort of move out of it. So if you use stop losses that are too large and then you don't have enough room, you're never going to have a positive risk reward. Now, positive risk reward is something that I really want to see everybody do, whether you're a scalper or not. In fact, some of the best scalpers probably have a pretty good, decent risk reward, 1.3, 1.5, and sometimes they can catch, a good chunk of the trend as well for like a 2 to 3R multiples, which for intraday is a lot, right? Even if you're only going for tiny little bits of movement, they should still be large enough, so not 2 to 4 ticks. That's probably why people don't do well at scalping, because they think that taking 7 ticks out of the market is great. No, aim for 20, 30, right? But use your stops of about 10, 15, 20. Depends on what you're trading on. Try that on NQ and you're just going to get run over. So obviously NQ, if I'm talking ticks, I would translate that into points and handles. So if I say, 20 ticks on crude oil, to me that would be pretty similar to using 20 handles on NQ, but these days even that is not enough. So setting the stop loss, one very widely accepted way is to use ATR. So just look at what the ATR is on the time frame that you're trying to execute and get the patterns from. And then, for example, on crude oil right now, on a 30-minute time frame, it's telling me that it's 29. So it's actually a pretty wide range. Usually we have like 12 to 15. But if you go down to a 5-minute chart, that is probably going to change. So yeah, right now it's 13 there. So really right away we can surmise that today you might be able to use stop losses that are about 15 to 25 ticks on crude oil, okay? But like I said, I like to go about it a slightly different way. I take the average session range, and then I start dividing it. But then I also have this way to look at what the actual move and follow through is as a setup. So whatever setup I had, how much follow through did that have, and then I sort of work backwards, where I would effectively see what the move is, and then sort of look to maybe get a stop loss size that would allow me to take advantage of that move and still get 2R multiples. So I hope that helps. Someone wanted the post-mortem process back up. So here it is. And whilst I wait for, I think it was Amanda who said that. So yeah. Okay, so says, yeah, while I'm waiting for that, let's answer the next question. Can you explain your today's trade, this $900? This was just a scalp. So it was a scalp off a failed Asia high. So I was looking at Asia high. Again, remember, I always have an orientation point. So this was Asia high over here. So let me actually get a little circle. Why not? So this was Asia high. There it is. And then, as we were kind of opening London, the price tried to get up there and promptly failed. And then we had like some consolidations and stuff. But I figured, do you know what? I'm going to take a punt there. I was actually getting ready and just setting up the lights and everything. And then I saw that. So I'm like, if that goes through and then doesn't manage to hold above, I'm definitely going to scalp it. So that was it. And then we had a big drop. So that's where that came from. Very, very simple setup. Not that I usually do that, but sometimes if we are hitting those orientation points, I have alerts from one of my other platforms, and then it sends me an alert to my phone. So as I was getting ready, it notified me that Asia high was near, and I literally was getting ready there, messing around with the lights, setting everything up, and then I'm like, okay, so we had some reversal. In fact, if you look at the 15-minute chart, it was starting to give me this selling wick. So that was my loose entry. So yeah, so didn't overthink it, just went in, 3 lots, see money, take money, and that was it. So yeah, let's go back to the post-mortem. Here it is. Let's make it so that everybody can see that. All right, so let me know what you would like to pick my brain on in relation to this. So I say, does someone know how to switch between regular and electronic hours in Topstep? What do you mean? I mean, it's all the same chart. It's just knowing when the regular trading hours begin. So are you doing some calculations yourself? Because right now you can have a fixed volume profile, and you can also have the other volume profile where you basically can drag it exactly from the hours that you want. They're working on TPO profile, so again, I have all of my other Block indicator charts on my other screens right now, but we are doing Topstep X now, so they are working on getting all of the lovely tools in there. Matthew Nichols says, Dee, when you get a chance, could you bring that to... Oh, yeah, so that was it. So, yeah. So, Matthew, here is the chart. So, let me know what you would like to do. Or you can take a screenshot of it as well. In fact, I can remove my face and make it into a full screen. You can grab that. So, yeah. Okay, we have a non-related trading question. How the hell are you so fit and slim while sitting on these charts for countless hours? I need to work on my weight. If I wasn't 6'4", I'd look like a meatball. I'm 5'1", and I do control my, okay, hopefully you took that. So let me come back. And let's go back to the charts. Yeah, so the fitness part, I used to be a bodybuilding freak. Like I used to go to the gym every day. I do have some health issues that are preventing me from exercising, but I still walk my dogs like 4 times a week for an hour, and then I control everything else through diet, right? So I wouldn't call it a diet because that's the wrong word. I would say it's more nutritional choices. I am low carb / keto. I'm not that young. No, I'm not that old either, but I'm going to be 44, not too far off. So obviously a lot of women, especially as they get into mid-40s, they pile on a bunch of weight. And, I'm very aware that the older you get, for most people, for the majority of people, our tolerance to carbohydrates massively decreases. So you get something called insulin resistance. So even though it's not like full-on diabetes or something, your ability to process the amount of carbs and poison that's like all around us diminishes each year that we live, right? And once you get to a certain age, suddenly you start getting little fat pockets that you never had. I've got to say I was always a naturally slim person, okay? So I was only maybe chubby in my life one time, and that was when I met my husband-to-be. We got very comfortable, and then we stopped smoking, both of us, and then we piled on a bunch of weight. You're comfortable, you found somebody you really like spending time with, and then, we're like, oh, we're so healthy, but we were like smashing down pizzas and curries all night. So yeah, once we realized that that's not the way, we both got into, an active lifestyle. And we were both actually going to the gym together 5-6 times a week. But as a part of that journey, obviously nutrition is a big thing. You can spend like countless hours at the gym, but if you're still eating crap like, all day, every day, and eating like it's a cheat meal day every day, that's not going to be good for you. So discipline in all areas of your life can help you with trading, It's like circumstantial, right? So it's like if you are not good with self-discipline in other areas, that's going to come back to bite you in trading, because any inconsistencies that you have in your own mindset, how you approach life in general, that will have an impact on your ability to control yourself in the markets, right? So trying to control that, like I know that keto might be hardcore for some people because you really need to do it right, otherwise you're just going to be, making mistakes. Like sometimes if you eat too many tomatoes, you can knock yourself out of keto. But I try to float between low carb, and my diet is actually pretty simple. I always will choose some sort of protein and salad with a very light sort of vinaigrette dressing. So it's vinegar, oil, salt, done, right? That is it. So very simple. And then piece of meat like pork or vegan protein. I have some problems with allergies and stuff these days. So I have to stick away from certain meats. For some reason, I can't process chicken and beef. So I've eaten chicken and beef for 40 years, and now that's like really bothering me and causing a whole bunch of problems and stuff. So it's kind of like lactose intolerance, but to meat. It's like, what? So yeah, my diet, very simple, no thing, like even if you go to a restaurant, people are like, well, what am I going to eat on keto? Eat steak and salad, man. Like, it's really not that tough. What am I going to eat in Pizza Express? Chicken nuggets. It's got a bit of breading on it and stuff, but, it's doable. Or, get some salmon or something. I don't know. There's always an option if you... Yeah, and you don't even have to make a huge fuss about it. Like, if people didn't know that I'm keto or low carb, they really wouldn't know it by the things that I order, People overcomplicate things. So keep it simple. Green vegetables, cucumbers, lettuce, and some sort of protein. And then a nice vinaigrette. Done. None of these like sauces and stuff. They tend to have a lot of sugars in them. But don't get me wrong, if I'm out, if we're celebrating something and people are like, oh, let's go have pizza, I will have that pizza, just not very often. So moderation is key. So hopefully that helps people. Are you talking? Yeah, okay. So Bruno is now telling me that maybe you're talking about setting the maybe your time zone, and the time zone is here. So you can see mine says UTC +1, which is British Standard Time. But if you're elsewhere, you can just click on that and change it. I think Anne-Marie had a problem with that. So find yourself in your time zones here, and maybe that was your question. So hopefully, yeah. Guy from LV says, Dee, is the pre-market prep document available somewhere? So it's available for my Market Stalkers in the Market Stalkers Method Pro development program. I don't give it out freely because it's very, very related to the levels that I teach. So if you don't know those, you're just going to be sitting there going, so where do I find ASR? And then, that's a part of the Blotech DR indicator. So it's like, if you don't have that, you're going to have to do it yourself, taking like time series data, exporting it, and like, it's very painful, right? And I used to do that before we had the software development company. So, and then also, hypo 1. And then you're like, what sort of like hypo 1? What? And then if it says auction fade from, certain level that we use, and you're like, what is an auction fade, and how do I enter it? How do I even recognize it? So that's why I don't really want to give it out to people. If you're not familiar with the method, it's all just going to be like, all Greek to you. You need to find, like, if you don't use my method, obviously you need to find your own way that will work for you. If you come to me, I will, happily give you the download, not a problem. But I'm just very careful that it's a little bit over the top unless you've been through the whole supply and demand, Q points that Dee teaches very systematically. And then towards the end of the module 2 that we have as a part of the Pro Dev program, that's when you get this pre-market prep or market prep for download. Because at that point, you know how to identify a good quality area from a larger time frame. You know what it means to read the chart. You've now lived for at least 3 months with the method, and you're getting familiar. And then you can take full advantage of that. All right, so Topstep X would be the best if we get footprint chart there. Yeah, I think they're working on things like bookmap, footprint, or something similar that they can have. You can have a look at the planned area. I'm going to try not to spill coffee on me next time I do that. There's also another very good thing about the nutrition, intermittent fasting. Now, intermittent fasting is good if you don't have any health issues. Now, these days, because of a lot of people have long COVID and vaccine injuries and a whole bunch of other stuff. So be a bit careful. But yes, I do intermittent fasting myself. And in fact, I was never one of the people to eat in the morning, and for that matter, I would never really eat until about like 3-4 p.m. my time, and that works well. But I do have coffees with heavy cream, or double cream as we call it here. So coffee, double cream, that's my choice of beverage and breakfast. So that's how I keep myself fairly fit. And I think that, interesting thing with keto is that keto has an emotional aspect to it, where it doesn't have too many ups and downs. I find that every time I'm on carbs, my ability to handle stress and stuff just goes. Let's just say it's much lower threshold than when I'm on keto. And people always say how calm I am. I don't really necessarily attach my well-being to whatever happens to my P&L. I've worked very hard to unglue myself from that. So whatever's going on, on the day or whatever, it's trading. It happens. Like, I've been through cycles of ups and downs and stuff long enough to know that shouldn't really affect you. All right, footprint charts. Here's a Here is a footprint chart request with 266 upvotes. So it says in review. I'll be honest, I don't use footprint because I use Dome and Bookmap, and I think footprints to me is kind of going too granular, and it's good, but because of the way that I look at the markets from like other things, I found it overkill. Like total overkill. And you know, maybe if you're like aiming, you know, to be a scalper or something, that could be better. But I look for much bigger reversal points. And then if I do a scalp, it's a fairly obvious thing, like my Asia low, and then we're just having sellers on Bookmap and I go in. So, you know, I don't need to look at anything else. So it says in review. So it's in review. If you want to bump this up, if you really want to see footprint charts, you need to bump this up, guys. So find this this post by Eric Douglas and upvote it to like 1,000 or 800, you know, and then that's going to be planned. So they move it up the ladder in their development queue, and that's how we work on getting Topstep better and better, right? Okay, so how to draw volume weighted, so VWAP, yeah? They have it as an indicator. We don't do it like, you know, you get a moving average and then divided by volume, which is what usually it is. I mean, there's different ways to calculate it, but you just have it as an indicator. So you just go into indicators and you go VWAP, so VWAP, and you plot it on the chart. And that's it. You get VWAP. There is session VWAP as well. I don't know whether we can get session VWAP here because this one is, I think, overnight. It is overnight, I believe. Yeah, it's pretty similar to overnight. But yeah, so some of the other ways to do it is to have anchored VWAP. And I do believe that you can anchor this VWAP. Can you? Yeah, anchor period. Here we go. Now, they don't have highs and lows here that I can see. But maybe that's something they're working on. So I like to use separate charting, obviously, for many reasons, but mainly because I'm set in my ways. And then I can anchor it to whatever I want. But typically, my anchor will be either start of the regular trading hours, but I always have the overnight VWAP in general. So for example, right now, I'm seeing crude oil potentially going into an auction fade now. So let me just have a look. And that's happening around the London value low from the inside. I'm not too crazy about going in longs from inside of the value areas. But because we kind of popped our nose a little bit outside of it, actually, this might be a choice. So let's just go one lot because we're coming into sort of towards the end of the part of London when, you know, you can see these moves that go the other way. And I'm actually only going to run this to VWAP, so it's only like a very small thing. And I don't want to get hit for more than 180, so I'm only using 16 ticks for my stop here to get about, let's say, 22. So we'll see how that works out. This is now an auction fade. And we'll see whether we can get this bullish engulfing on a 15-minute chart to push us even further. And if not, I only get hit for $160, so no biggie. But yeah, these sort of setups would work better if we are in what I call the post and white cuts. So basically, you've had an extended move in one direction, then we reverse. And then you have some other mechanistic things that happen around that time of day. That's 3 p.m., after 3 p.m. my time. And then usually sort of around Euro close is when I want to see these. But just, you know, just for a little hypo here that might have popped up as I was talking. So value low, this would be counted as a responsive activity trade reversal because we popped below the value area. We tried to go outside of it. So we opened in balance, spent a lot of time in balance, and now we try to go outside of it. Now, if we keep going outside of it, obviously we have a potential for a directional day, in which case I'm looking at a average session range low a little bit further down at 73.80. So it will be, again, everything is a zone, but I'm just going to put a horizontal line there. So this is where average session range lows is. So if we continue downwards, you can try and scalp this down if this bullish engulfing doesn't hold. And then the next area for longs, so I'm not going to keep trying longing it away from my orientation point. So there's value area low here, and then we have the average session range low down here. If I can find an opportunistic directional trade down there, I might do that too. But I would still need an orientation point. Initial balance low matching with VWAP, for example, that would be good. So yeah, we'll see what happens. Let's keep going. How long did it take you to get profitable? So I had the fortune of having a friend of mine who was a trader who introduced me to trading. So right away I saw some success, but it probably, like we're talking profitability versus consistent profitability, two very different things. You can be profitable overall, but there could be a lot of mess ups along the way. So you'll be up, you'll be down, you'll be scratched, but overall you're kind of making money, right? So that was never my intention. I wanted to make sure that I am profitable consistently, right? And that took time. That took a long time. So I was profitable from the start, right? I did swing trading in Forex. In fact, we had the podcast with myself and Austin Silver released yesterday. I posted that on my socials. So if you haven't seen that, go and check it out. But it's got some gold nuggets in there. He asked me so many great questions, and we just chatted like we've known each other forever, and yet we haven't actually met before. Like we know of each other from TopstepTV, obviously. It's a very bizarre sort of situation where you kind of know people, but you don't you don't know them, and they know you, but you don't really know them. So yeah, very, very good question there. So consistent profitability over profitability are two different things. If I'm going to say profitability, probably took me about 3 months just to kind of get the grips with, risk reward, good trading locations, and then not over trading. That was like the biggest thing, not over trading. Sticking to, back then, because I was a swing trader, sticking to about 3 trades per week or less. Now, as an intraday trader, I stick to 3 to 5 trades per day, but it all depends how the first couple go. If the first couple are not great, I will then stop at 3 trades, try another thing, and then if that doesn't really, if it doesn't really go, I'm out. Very frequently, those first couple of trades will be partial losses, not like full -1R. And -1R for me is 35 ticks on crude oil, for example. So even this, if I get hit for 16 ticks, that's only -0.5R in the way I do the overall math and overall risk model. But then if the first, like for example, my first trade went well, so I've got some buffer. So now I can keep going. If the second trade loses -0.5R, I can try another 2 trades after that. If they get me to -1R as well, I will be done for the day. So I'm not going to keep going, keep trying, keep doing that. It's going to be done. But let's assume that this one works out. There's 2 trades that worked out. So now you have even more of a buffer. You can keep going. But I don't size up the more buffer I have. I kind of keep it the same. And in fact, I will lower the position size if I can as the day goes on, so that those next few wins are effectively just add-ons to whatever you have. Because at that point, when you've made money on the day, the whole point is to actually keep the money, not to just throw it out the window, right? So a lot of people do the opposite, right? But when it comes to losses, I keep them the same size. So, but I stop after a certain amount. And that's what brings consistent profitability into the mix. So consistent profitability is down to several moving parts. And it's all like on a seesaw, like on a very finely tuned balance and equilibrium. Number of trades you do, your position sizing, your stop sizing, and when you stop, right? So how many trades do you do in a day? If you're always doing 3, or if you're doing 3, but then suddenly you do 10, that's going to mess up the risk model. If you're always doing one position size and then suddenly you do 10, that's obviously going to mess up the risk. So all of that plays into how consistent you're going to be. So some people now, after, losing that, they'll be, oh, I'm going to try again. I'm bullish and nothing. No, because right now I have different orientation points, right? Didn't work, little gap, it's fine. But then you go rectangle. Where's my initial bounce low? So 41.50 is where we have the initial bounce low and where we have VWAP. So if I want to be a seller, I don't care what happens here anymore because I tried one, didn't work, we keep slipping. There's no follow through. That gives you information. To me, losses are not, they're not like, oh, lost. It's data. It's extra piece of information that you pay some money for. So the more you can unglue yourself from this idea that it's a loss, it's not a loss, it's an expense. You pay a bit of money for information. If you're correct, all the better. If you're not, that's information. You don't chase. So this is why now I stay away from the middle. So we assume that this is either going to run back up or continue down. But this is not relevant for market participants. They're not caring much. This was a momentary pop-up that didn't really have follow-through. If we were going to have follow-through, this next candle wouldn't be red, right? It would just keep pushing up. Again, beware that this is an out-of-hours session for crude oil. So things are nowhere near as crazy as they are in NYMEX, and there's a lot of lack of follow-through. So now, like I said, this is going to remain my area of interest, probably for the rest of the day, actually, because we have overnight VWAP there for now. When it comes to the average session range, that's going to change because as we get out of London and into the NYMEX session, we're going to have a new orientation point. Okay. All right. Final question. Final couple questions. How do you calculate your ATR? Oh, actually, I didn't actually answer the whole consistent profitability. It probably took me 9 years. So I started trading in 2007. Consistent profitability where everything was like great and I knew exactly what is going on, what I'm doing wrong, and how I can kind of get back on track. That took me 9 years. But profitability, I've been profitable pretty much from the start. However, there were a lot of ups and downs. So yeah. How do you calculate ATR? ATR and ADR have one big difference, and that's that ATR takes in any gaps on the day when you're taking the full 24-hour calculation. So that means if you have a gap, let's say on a Monday morning, the ATR is going to take that gap into the calculation and it's going to say ATR busted. But ADR doesn't do that. ADR ignores the gaps and starts the calculation from wherever you started, right? So that's why I prefer ADR over ATR. But ATR is good for stop loss sizes, right? So that is plotted on a lower time frame typically, and then you basically just calculate the average of the previous n number of candles. For this one is 14 because by some calculations that is the golden number. There was a guy who came up with ATR and that is the number that he came up with. But I will be honest with the some of the outlier moves when you're looking at ADR, ASR, and ADR as reversal levels, not as a measure for a stop loss. I would have to say that using something slightly wider, especially if you've had an abnormal week. We've had 2 very abnormal weeks on crude oil and on equities as well. And that means I want it smoothed out. So I don't want to take the outlier weeks into the calculation. And that's why I've been using 40 recently. And that seems to be much better to bring me that historic mean average that I'm after. Final question. If a move has reversed with low volume and liquidity was taken, i.e. gold high, will this be tested again and is it more probable to make a new high or reverse again? That would be a case-by-case basis. However, we may not see the test of that, let's say, all-time high that day or even, that week, but it will get up there at some point. The idea behind liquidity grabs and then slow moves back towards them and through them again is the fact that on the first run through, let's say the buying power doesn't quite yet have enough energy to get you all the way through that. Sometimes it does, but other times you'll get these horrendous reversals from all-time highs, and that's why. However, over time, we expect that the volume will build, and then the more momentum that you can build into that all-time high or into any high or low, it will give more energy to kind of keep going. If you don't have that energy and volume kind of just drops off, there's no trade there, right? So then it's more likely to reverse. You can ask Coach Jay about volume. I'm not a volume expert. I use it very sparingly in some of my setups, but Coach Jay is awesome as a volume analyst. He's like the guy to go for volume. All right, guys, this was fun. This is the last session for this week. I think I will see you again on Monday. I know that we have a holiday. It's Labor Day, I believe. But I think we have a shortened session, so I think London is going to go through. And at the end of the day, we don't have Labor Day in London, so the markets will be open as normal. Again, if you haven't pressed the like and if you got some value out of what I was saying, do click a like. I do have some plugs to do for you before I completely sign off. You know that the daily loss limit has been removed, so newly activated combines are not going to have the daily loss limit at all. So this area that we used to have daily loss limit, it's going to be removed. If you want the personal daily loss limit, which I do advise having, you need to go into settings, then go into risk tab, and you can set it to whatever you want. You can set it to the old 3,000, okay? But you can also set it to something more sensible, like 1,500. Now, in order for this personal daily loss limit to be activated, you do need to select liquidate and block, and then it's going to close out positions and block you out for the day until the following session. So these are customizable things now. You have the option, once you've built up a buffer, to actually increase your loss limit. But don't go nuts with it, right? Don't go from 1,500 and then go to 5,000 because I now have 5,000 to play with. Go slow. Go like 1,800, right? And keep going. I also advise that you do this in your XFA. So let's say for the first day of the XFA, don't lose more than 500, man. You know, don't. Just don't. And then as you build a buffer, you can start increasing that. So increase it to 750, then increase it to 1,000, then increase it to 1,500. It will save you. It will save you. It will make you make better trading decisions, and it's not going to dig a huge hole in your account. So we suggest that all traders do still set a PDLL. Now, Topstep stats analysis. I'm going to start analyzing people's stats as well, but let's go one step further in light of what the plan process should be, and then we can have a look at journal entries for that day to see the quality of your plans. So not just stats, but also what were you planning on the day and how did you execute, right? So plan and then post-mortem. So if that's something you want to see me do from next week, do let me know. And then I'm going to get in touch with the producers just to see, how we can make that happen. But obviously, because we have the stats section, it should be fairly easy because it's all in the journal area. It can all be text-based, right? So just text-based, that's fine. I don't mind that. You don't need to have a whole bunch of charts in there and, confuse the hell out of me. So we're just going to have quality of the plan and then at the end of the day, post-mortem review, okay? Let's start doing that. Until then, until next week, enjoy the rest of the programming. I will actually see you today for Market Talking with Dee because that is my final segment for this week. Until then, take care. Don't do anything I wouldn't do. Let's try to be less grasshopper and more market stalker. I'll see you guys later.